Bank week is here. Many institutions are reporting earnings for the first quarter this week, and we get to start it off with Goldman Sachs. But first, before we get into that, be sure to like, subscribe, and join the Discord that I have linked in the description below. Goldman Sachs dropped 2% intraday after gapping down over 4% at the open, even as the bank reported earnings and revenue that topped Wall Street expectations. As always, of course, there is a little bit more than meets the eye here. So Goldman posted net income of 5.63 billion on revenue of 17.23 billion for the quarter, with earnings per share of 17.55, beating analyst expectations of 16.49 per share on revenue of just under 17 billion. So their fixed income currencies and commodities revenue, colloquially known as FICC or FIC, came in nearly 20% short of ficking expectations. So that ficking miss gives me a little ficking concern about how other institutions have navigated these crazy ficking conditions. Goldman also reported a massive provision for credit losses at 315 million, defying the odds and beating the 150 million analyst expectations. So this questions their exposure to private credit markets. If you're interested in learning about private credit markets, I also have a long form video that will also be linked down in the description. So despite the great performance in equity trading revenue and investment banking fees climbing due to more deal making happening, Wall Street sees risk as the economy slows, the war in Iran rages, and sentiment just drags on every fickin' retail buy dipping son of a bitch that ever existed. This week, I would be ready to see some weakness in the large cap, specifically in the financial sector. I'll personally be waiting for the IV crush from earnings to end, and if everything is looking generally weak, I'll likely take some further dated at the money puts. Tomorrow, we hear from JP Morgan, Citigroup, Wells Fargo, and asset manager BlackRock. If you've liked this video, put a comment down below, let me know, and look out for the next one. Until then, stay safe, everybody. Cheers.